Hello and welcome to another episode of Creating Success with Nidal Rasheed. And today I have a very special guest with us, Bechara. Now, Bechara has been a #1 loan writer with Aussie for many years continuously. He's also a co-principal of the #1 Aussie branch in Australia and has been helping a wide range of first home buyers, mum and dad owner occupiers, property investors over the years. So him and his team have helped thousands of people over the year. And today is my absolute pleasure to dig deep and pick out some golden nuggets from Bechara. So welcome on the call, Bechara. Thanks for jumping on.
Thanks, Nidal. Thanks for having me.
No worries. Now, Bechara, I always like to start off with finding out a bit of a background on who our guest speakers are. So can you give us a short story of where you started and how you've come about to do what you're doing now?
Yeah, I can do that. I actually came into it accidentally. Really, I finished school. I went to uni, and I was working part time at a particular telecommunications company. And I was just working one day, and on the internet, if you can visualize when you're on the internet, they've got ads and banners on the right hand side. And I was just at work one day, and it popped up with a particular bank and said, "Would you consider a career in banking?" And I thought, yeah, I probably would. I was doing some finance subjects and economics at uni. And I thought, yeah, why not? So I applied, and then fast forward 2 weeks, I got the job, which was, I didn't even intend to quit my job. So it was pretty accidental. But then when I got into the job, the particular lender at the branch at the time just went on stress leave. He wasn't there. And by default, I was the only person that could assist. So then I decided to help people lend and do personal loans and things like that. And it kind of grew. I enjoyed it. Stayed at that bank for a few years and then wanted to experience something different. So I moved to a credit union and then spent a few years at that credit union and then thought, no, I want to do this, but I want to do it my way. I want to set up my business and I want to be able to access more than one bank. So it actually just started as a not a freak accident, but just an accident. I didn't intend to quit my job and I did. And then I fell in. And when I first heard about brokers when I was at the credit union, I didn't even know what a broker did. I remember like driving home going, so how do these guys get paid? So I didn't know anything about it when I first got into it. And that was, years ago now. So yeah, that's how I got here.
Awesome. And look, I guess a lot of people don't know what a broker actually does. Can you give us a bit of a insight on what does a broker do? What value do they provide? And, what are the services that you offer?
Yeah. Each brokerage is different. Each broker is different. And the level of service and services that they provide is very different. But I guess would facilitate my clients' financial objectives, whether it be with home loans or with the commercial loans or car loans, asset finance, things like that. My job, as the name would suggest, is to broker the deal, broker the transaction between the client and the financier or the bank or the lender. And that sounds pretty simple, but it can be tricky because you have to navigate, thousands of different products, different policies, different lenders. Make sure your client's getting what they are after, what suits them, what works for them, and then staying up to date with, I guess, changes in the industry, and then helping service that client, for as long as they've got that debt, regular calls, check-ins, revisiting their loan, reviewing it. And then if someone's building, you're communicating with the building consultant, with the developer, sometimes with councils, people like yourself, if there's agents involved. So you're kind of driving the financial vehicle, if you will, and helping your clients achieve their financial objectives, whether it's one house or 101 houses. My job's to help them facilitate it.
Absolutely. And look, I mean, I've been intimately involved with brokers for many years, and I can, say that I've got a lot of respect for brokers and the work that they do, because all the pressure falls on you guys when someone comes to buy property or invest or make any decision really that requires finance. Yeah. You guys are in the firing line, and you guys are at the, at the tip of it. So yeah, I guess, like over these, I've seen good and bad brokers. In your opinion, what makes a good broker?
Communication.
Mm-hmm.
Communication is key, and that sounds pretty simple, that's pretty obvious. But you'll be very surprised across my industry, your industry, and the property industry, how lack of communication really will kill a deal. People don't respond, people don't answer calls. So I think an average broker will get the client the loan. It's actually not about can I get the loan or can I get the best interest rate, because you can do that sort of stuff on Google. It actually comes back to something called, which we refer to it here as the language of credit. So understanding the bank policy. And it's not as simple as here's my ID, here's my pay slips, can I borrow the money? The lending landscape's changed drastically in the last year, let alone 5 years, 10 years. So you have to understand what the banks want, their appetite, what your clients want, how you can make that happen. And your ability to communicate is key. You have to be able to ring and share those bad moments with clients sometimes, and you're in the firing line, and work out a solution. So you have to be a Mr. Fix It at times. And then you're there for the good times. You're communicating. So you have to be in the position to ring, answer, be available, deal with problems, deal with successes, and be that person that just continues to push and help your client move forward. So if you can't communicate, I don't think you will succeed in this business.
I completely agree. And they say communication is the number one skill set in the world. So if you don't get that right, then, everything kind of falls apart. You touched on this very briefly then, because, we do live in an information age where information is available to everyone, with a click of a button, especially with Google and all that. Now, people obviously can jump online and look at deals and look at what all the lenders are offering, and they can, they can pretty much do it all on their own anyway these days. And there's some lenders that are promoting, stupid rates to try and, incentivize people to do an online application as opposed to going to their bank or their broker or that. Why, in your opinion, why would someone or why should someone deal with a broker or someone to look after them rather than go out there and do it on their own?
Good question. And this is one of those questions where we could have an entire session on this in its entirety. The biggest difference, let's sum it up in one phrase, would be tunnel vision. So we'll use you as an example, Nidal. You're running a business, you're looking to borrow money. How you're assessed will be very different to how someone working for somebody else with a few pay slips is assessed. So the understanding of credit is very intricate. So, for example, can Nidal jump on Google and get an interest rate? You probably could. Can you get a home loan? You probably could. If something goes wrong, you don't have the support, the knowledge base. More than likely, the person you're dealing with is there. It's just a job. It may not be a career, so they probably won't be there in a few years' time. It looks on paper that this might be a better option, but if anything is to go wrong, if that particular lender is to refuse the application, that might give you false hope. And you think, well, I can't borrow money in the future. The ability to have someone like a broker is you've got access to thousands of products, 20, 30, depending on the structure, different lenders, policies. So being told no by one bank is just the opinion of that bank based on their policy. There's other lenders, other options, other alternatives. So as a broker, you don't have tunnel vision where you can just see ahead. You've got a wide range of lenders to look at. So the reason you go to a broker is for that. It's for the ability to look at more than one bank. I would challenge you to see how long it would take you to go through 25 banks, 4,000 different loans and 25 policies. And even if you did find the time to do all of that, it's actually understanding it and coming back and saying, this makes logical sense. I know what decision I'm making moving forward. So the product knowledge, the experience, the ability to speak to more lenders, the convenience of getting everything done for you. And if you walk into hypothetically a bank, that bank can only offer you what that bank has to offer. They're very limited. The broker's got access to more than one option. And sometimes you have to sit back and say, right, Nidal, this won't work for you because this bank's policy doesn't support this. However, there's 3 or 4 banks that will help with this.
But I guess my favorite thing about dealing with brokers is the amount of time that they save you and, being able to draw on their experience, because an average loan these days would take at least about 20 hours worth of work between all the follow-ups, going back and forth and applications and going through it. So if someone places value on their time, I highly recommend that they find a good broker that they can work with and someone that's got experience, because there's nothing worse than dealing with someone who's going to, practice and train on them. Yeah. So,
I mean, a good analogy to look at is, do you, not in your case, because you don't have much, but do you cut your own hair? Most people go to a hairdresser.
Exactly.
Do you service your own car? Yep. Most people go to the mechanic. So they go to the trusted professional who knows what they're doing to get the job done. Otherwise, you would be under the bonnet of the car all day trying to find out what's wrong and how to service. So it's the same concept. You go to the professional who's got the experience, they can do it for you.
Absolutely. I was going to use a different example, but maybe a pharmacist. You wouldn't go to, if you went into the pharmacist and you got a headache, he's going to prescribe a particular type of medication. So whereas if you try and Google your own symptoms, you could sort of go in many different directions and you don't know where you'll end up, basically.
Yeah, exactly right. Same concept.
No, definitely. Now, look, Bechara, we obviously work in similar spaces. So you help our clients when it comes to finding the loan for them and helping them assess how much they can borrow, how much deposit they'll need. And I guess one of the questions, or some of the questions I always get asked with clients who want to buy property or invest in property, and the most common ones is, Nidal, how much can I borrow, and how much deposit will I need, and how will the bank look at my situation? And, whilst there are formulas and everything like that, I'm interested to hear your take on this. So what would you tell someone who comes to you and just wants that preliminary advice on servicing ability and funding ability?
Yeah. Are you asking is this person wanting me to give the information on the phone, or are they just asking generally how it works?
Just generally, for the average person
Yep.
who's thinking about buying property and they don't want to particularly, sit down for an appointment and go through that process in intricate detail. They just want to get a rough idea.
Yep.
What would you say to them?
So most people, the most common questions I get from new clients is, there's probably 3 or 4 of them, but can I borrow the money? When can I have the money? What's it going to cost me? And do you see we're going to have any problems in terms of getting the cash? There's probably the most 3 to 4 questions you see all the time. And then as an emotional experience buying a house, it's pretty common to want to ask those questions. For me personally, I don't want to waste my clients' time. If they want the particular information, I'm happy to give them the information. But it's also like, we'll go back to the hairdresser analogy. You can't ring your hairdresser to get your haircut. You have to go to your hairdresser to get your haircut. That's the same sort of concept. I can't be giving Nidal information on finances if I haven't seen any of your particulars on finances. It would actually be very irresponsible, because I could be sending you down a rabbit hole. So when I get the person saying, I want to know these things, I say, absolutely, Nidal, it is integral to know what you can borrow. You need to know this and how the bank will assess this, and what deposits you have, how much you're spending, what's the cost to acquire the property, and do we have enough of a deposit? But the other thing that's very important is, can you actually afford it? Not does the bank think you can afford it, can you actually afford it? And my job is to sit down and conduct an analysis or a consultation, if you will, and go through that and say, can this be done? Is it the right thing for my client? And can we find a bank that's going to facilitate it for us? And then I'll discuss the process with them. Here's why income's important. Here's why your savings and contributions important. And then from there, I'll make a time to catch up with them. But they're the 3 main things people want to ask. And the one thing is, can I get the money? Can I have it? Can I have it? That's what people want to know. And you need to do a bit of homework before you can ask that question. But if you, I think, educate your client and say, here's why I can't just give you a figure. Here's why I need to do a little bit of homework on it. I think they respect that. And you can't just be throwing loans at people. You have to be doing your due diligence, making sure it's the right thing for them. And if it is, then you can help them from there.
Absolutely. And yeah, look, like you said, it's irresponsible to try and give someone that advice without knowing what the situation looks like. But I guess in terms of just generally speaking, and this isn't directly for anyone specific, obviously this interview is not any financial advice or credit advice or anything like that for anyone, but what are some of the products out there that allow people to get into the market? So I've heard that there's, loans that, you can get a loan with a 5% deposit. I've heard of even 2% deposit. There's some really, interesting ways. Whereas I find that most people have this idea that they need a 20% deposit to buy a property, whereas it's not the case.
No, it's not at all. And it's very subjective to the lender. So different banks have different policies. Some banks will need a greater deposit than others. Some banks will need a smaller deposit than others. Some banks have a bigger appetite risk. So there are some banks that want 20%, depending on the transaction and the customer. There are some banks that are happy with 5% or 10%. The policy will vary from bank to bank, but it's also the applicant, what you qualify for with that particular bank. Because you can have one bank that has 3 or 4 different policies, and you may not fit into one versus the other. So there is a rule of thumb that I must have 20. That's a good idea. You know what? The more you have, the better, because the less interest you pay, the less money you borrow. But you don't have to necessarily have 20%. There are lenders, products, and these aren't unheard of lenders. Some of them are well-established institutions and facilities available that they can lend a little bit more, because that's how they're designed and that's how they're built. They're designed to lend a little bit more. It's obviously a bit more riskier for the bank and the customer, because you're borrowing more, but they're designed to help people get into their first home. So, and this goes back to your question really early on. Why would someone go to a broker versus a bank? Because the scope and the possibility to see more and do more is greater. It's enlarged having a broker.
Of course. The bottom line is there's no one size fits all when it comes to finance. It's,
No.
it's very, very tailor made. And like you said,
Yes.
a combination of reasons. And it's a bit of a juggling act because not only do you have to get the deposit amount right, but also the servicing, because whilst one lender might give you the ability to do it with low deposit, they want you to be able to service for a little bit more.
Yep.
I
Yes.
guess for the person who doesn't understand what serviceability means, what does that actually mean?
So the simplest way to explain it is your ability to afford the debt if you're proposing to acquire from the bank. So servicing the debt means if I'm spending, X dollars on buying a house, my loan's going to be, 1, 2, 3, for instance. Does my income and my living habits, my debts and my commitments allow for me to service this particular debt? So you get a certain gross income as if you're depending on how you make a living with companies or self-employed or whatever it might be, but whatever your income is. Then you have to pay tax in some instances. Then you have your commitments, your debts, if there's dependents, if there's not. And you work backwards, and there's something referred to as disposable income. So how much income is left that can be disposed that we can support the loan with. And
Sorry.
I actually think...
Yeah, I thought it just went mute there for a second.
Hang on a sec.
We're back on now.
Can you hear me?
Yep, we're back on.
No, I can't hear.
You can't hear me?
Yeah, now I can hear you.
All right, beautiful. We're back on now. No, put them back on.
Yeah, I think the headphones just cut out a little bit.
Okay, no worries.
Yeah, so how much disposable income is left? What can you afford? And that's what the bank will consider. So if you're making hypothetically $1,000 a week, and after all expenses you have $20 left, that's considered a low disposable income, as a simple example. So the disposable income's what the bank wants to see after your commitments and your debts are taken into consideration.
Cool. Is there a certain ratio that they like to see?
Look, it does vary. Obviously, the stronger it is on paper, the better. Different banks, different policies. If it's construction, if it's owner occupied, a few things will vary that.
Yeah.
But the bank wants to see, and rightfully so, the applicant's ability to service very comfortably. You don't want to be putting people in tight positions, but it really depends. You can sit with two people who have similar positions and get two very different outcomes depending on what they're doing or what their situation is. Absolutely.
And look, even more reason why, sit with the broker and actually, go through the details and unpack it, so you work out what you can borrow and how much you need up front. So this is great advice as well, Bechara. So we work with a lot of people who are probably getting into the real estate investing side of things for the first time. So helping someone buy a home, that requires a certain type of loan to be getting in. And I understand these days it's easier for a first home buyer to get in than it is for an investor to invest in properties, because of obviously different ways of assessing and different deposit amounts and things like that. What advice would you have for someone who's looking at investing in real estate for the first time, maybe?
If it's their first home, it actually doesn't actually matter. First or 50th home, I think the most important thing is to do your homework. Don't buy a house just because it's the flavor of the month or someone told you to buy a house or you saw something on Netflix that said invest in property. You really need to do your homework. Is it the right thing for you to do? Can you afford it? A lot of people, will buy an investment property and on the provision that it's going to have rental income, but you're not guaranteed rental income. That property could sit vacant for a week or a month. So what does your life look like if it is vacant? So do your homework and consult professionals. Speak to a broker, speak to a solicitor, speak to an agent, to property investors, and you can never be overeducated on a topic, I don't think. So do your homework, see what's out there, and turn around and say, right, I've done my homework. Does this make sense for me to move forward? So the most important thing I think would be do your homework. Sit with the broker, see what the broker can help you with. Can you even borrow the money? Is it too risky for you? Speak to agents to find out what areas you're looking at, how they're performing. Get a conveyancer or a lawyer to give you ideas on, their opinion on a contract. Is there anything that you need to be aware of? Just do the homework. Don't just do it because everybody's doing it. and understand why you're investing. Are you investing for capital growth? Are you investing for rental returns? Different people have different strategies. So why are you investing? And who gave, was it, good old mate Jim at the barbecue that told you to do that? Or did you get some good advice from somebody? So just do the homework and really understand what you're trying to achieve and consult the right people.
I 100% agree. I think education is key when it comes to investing, because buying a property is one of the biggest purchases that you'll make in your lifetime. So I find a lot of people will sit there and do more research on holiday destinations that they're going to go to, and places that they're going to go, rather than investing that time and effort on financial advice or investment advice, or on something that's going to make a lifelong impact on them. So education is key, and that's definitely something that I know you're big on and we're big on, and that's something that obviously we trying to help and educate as many people as possible along the way. So on that, obviously we spoke about what advice to give to someone starting out. What advice would you give to people to help them avoid the pitfalls? So what are some of the mistakes that you see some people making out there in their investment journey?
Yeah, good question. And it's fitting this question follows your first one, because the same rule applies. Do your homework. The most common mistakes I see are people not researching suburbs, areas, properties, banks, loans, conveyances, and they just do it. You'll meet some people that will have property and they have a very terrible experience with investing. And when you hear their story, it's easy to see why they had such a bad experience. And that could have been easily avoided if the appropriate homework and due diligence was done. So do your homework. Why are you looking to buy? And the most common mistake is people just, they see a billboard, they see an ad, they see something on Facebook, and they go, yep, I can do it. Mm-hmm. Just because you can do it doesn't mean it's a good idea. Or they invest for capital growth, and then they buy in an area that's got no capital growth. Mm-hmm. And then, well, that's never going to work. Yeah, but Jim, no offense to anyone called Jim listening, but Jim at the barbecue told me to do that. Well, Jim is a gardener. What would Jim know about capital growth in that particular area? Has he done his homework? So that's probably the biggest mistake you see, is people just doing it to do it. And this is not a quote I came up with. I heard this many years ago, but you have to know your money to grow your money. And if you don't know what you're doing, you're just going to end up in a worse position. And it's not, not to be, to make a lot of the situation, you can't just return the house. You can't just take it to the Salvation Army and give it to someone who's needy, like you could a pair of jeans if you didn't like them. Once you're committed, you're committed. There's three things in life that are very difficult to undo. Getting married, having kids, and buying a house. So you really need to be sure. You need to really be committed to it and not just rush into it.
Absolutely. And again, goes back to the point of get educated, because like you said, the lack of education causes people to make bad decisions. And I find that when people take their advice from the wrong areas, like, if you're getting advice from Uncle Jim, who bought a property 20 years ago in the right area by coincidence, and then all of a sudden they've had really good successes, at the barbecue, Uncle Jim is the king when it comes to property. So not understanding that, no, hold on, Uncle Jim's a gardener, that's what he does best. Actually find someone who's a professional and licensed, more importantly, in that space, to be able to give the advice and be able to guide and advise on investing. So look, I mean, that ties into really well to our next question in the sense that you guys obviously are the number one branch in the country, right? So you see the good, the bad, and the ugly. You've probably worked with, the most successful investors, as well as people who have got nothing and they're just starting out and trying to make it by. What do you find are the common patterns amongst those who are successful? So what are the common traits you find amongst those who are doing it well?
Probably the most common would be they're not taking decisions lightly. They're doing the homework in regards to it, and it's not a knee-jerk reaction. They're not just buying because they saw something on TV or read an article. So the most common successful things I see is the homework, the due diligence. If I said, Nidal, why are you looking to invest? And your response was, I don't know, because my mate told me to do it. It's probably not a good sign that you're doing it for the right reasons. A lot of the successful investors have a strategy in place, and they know what they're trying to achieve. And they also have professionals on board. They have qualified people to help them out with the process and give them the right guidance along the way. Not that you can't do that without the guidance, but it is a lot harder because you're then having to do all the legwork yourself. So you want a professional to help through it. So I do see a lot of investors. The more successful investors have a strategy, they've taken legal advice, they've taken financial advice, they've taken advice from every profession, built their strategy around that, and they are executing it, and they're not rushing the process. They're not trying to acquire 10 homes every year for 10 years. They're smart, they're diligent, and they're picking the properties that are going to perform best for what they're trying to achieve. So it's the strategy, and it kind of goes back to that homework piece. They've done their homework, they know what they want, and they're going to go achieve it.
Absolutely. And look, it again comes back to just knowing what the end goal is, being well educated, making decisions in a logical and educated manner, and knowing when you're on track and off track. So yeah, absolutely.
And that's the strategy. When you have a strategy, it's like when you play a game of sport. You have a strategy and you know what to execute it. But if you're not going according to plan, you'll know after the first quarter or the first half, this isn't really working. You don't just go through the whole game and then at the end go, well, how did we do? So you need to have strategy.
Yep, absolutely. And part of that is, knowing what your KPI is. If you're not hitting that KPI, then altering your strategy to go back and do something different. Because, the old saying, you keep doing the same thing over and over again and expecting a different result. That's the definition for insanity.
Yeah, exactly right.
Now, look, I understand that you do your own investing as well, Bechara, and you've been pretty successful at it as well over the years. And I'm always keen to see what people are doing that's working as well, because our investors are always looking at, different creative strategies and hearing other people's stories. What are some golden nuggets that you can share with our viewers that you've taken from your investment journey that's made you achieve success in the area of property investing?
I understood why I was investing. And that's very important, because if you don't understand why you're investing and you're just doing it, like, for example, if an investor comes to you, Nidal, and says, look, I want to buy a house, I want to invest, you don't just give them a set of keys and say, here you go. You have a process you go through to determine, can I help you? Why do you want this? And is my product going to help you? Because what you don't want is people buying properties from yourself to get to an investment portfolio that doesn't perform. That's not good for anybody. So the one thing I knew was why I wanted to invest. And it actually took me 18 months to find the house or the property in question. So I saw countless properties between day one and, the day I eventually found one. But none of them enticed me. None of them ticked the boxes I needed ticked. I was very diligent with that. So my strategy was A, B, C, D. If it didn't meet that, I wasn't going to buy that. So almost 2 years looking, because I didn't find anything that ticked all those boxes. And I had a strategy, and although I wanted to compromise and get the house and move on, it wasn't going to fit with what I needed. And I wouldn't have achieved growth in my property if I hadn't stuck to those particular the tick boxes, if you will. So it took me 18 months, but I knew why I was investing. As a result, I had a list of what I needed to find, and then I went out and found it. And I was under no stress, no pressure. I kept it quite personal, confidential. I didn't share it with too many people, because then everybody has an opinion. And then I just stuck to it. I knew why I was investing, and I went around until I found what I wanted. When I did, then I pulled the trigger. So the most important thing is, why are you investing? What do you want out of that property? Because it is a transaction. You're conducting business. What do you want to achieve? You don't want it to go wrong. That's the number one thing. So how do you make it go right? And what does right look like for you?
Yeah, absolutely. Because look, at the end of the day, you can't eliminate all the risk. All you can do is increase the probability of success when it comes to investing. And some people might be going, oh, what do you mean by why am I investing? I'm investing because I want to make money. But people don't understand that there's different results you can get out of your investing. Some people invest for cash flow because they want to find a positively geared property that's going to give them another income. Some people invest for capital growth because they want to be able to increase their capital position to then be able to further invest. So there are different reasons why. And I guess if you're uneducated in the space and don't know why you're investing, sometimes being able to be guided, whether it's from a mortgage broker or a property investment specialist or someone that can ask the right questions, can help draw that, So
100%.
Absolutely. Now, I always like to encourage people to deal with people who are good in this space, right? So you guys, again, number one in the country. You've been top loan writer for Aussie on multiple years. I've personally, worked with your clients and yourself, and can attest to, the level of service and the professionalism that you guys deliver to your clients. And I refer clients to you guys as well. How can someone get in touch with you guys? What steps would you encourage someone to take if they wanted to reach out and just sit down and start that conversation?
Call, mobile phone. It's the best means of. I mean, we live in a world where everybody's contactable in some way. You've got social media platforms, you've got different chat platforms, messaging services, emails. The best point of contact, and I firmly believe this, and I don't think it'll ever age, is human contact. Get on the phone,
100%.
call someone, because you can tell me in an email or in a text message your story of what you're looking to achieve. It's not going to come across as accurate and as enthusiastic if it's not over the phone. And if you're talking to a robot, you're going to expect that robot service. Whereas with my clients, I get a text message saying, look, my name's Jim, for instance. Nidal's asked me to give you a call. Can you email me some information? I actually say, no, give me a call. Like, the reality is, you don't wake up one morning and decide, I want debt. I want debt, and I want a lot of debt. You wake up and decide, I'm going to acquire a property. That's the exciting part. That's the journey. So if I can't speak to my clients and get involved with that, it's very hard to build rapport, build a relationship. So I think phone is the most important thing. Call on the mobile, anytime, any day. If any of my clients are watching, I'll tell you, I don't work Monday to Friday, 9 to 5. I've taken phone calls and emails and meetings at 6 a.m. on a Thursday and 10 p.m. on a Wednesday. So it just depends on the client's requirements within reason. Obviously, I've got a personal life as well, but just get on the phone, reach out, talk to somebody, tell them what you're looking to do. And then from there, you can determine meetings and emails and paperwork, all that sort of stuff. But in the first instance, get on the phone.
Yeah, absolutely. And we'll put your mobile number in the video if that's okay. So we'll put it in the description below. And I also understand, for people who aren't ready to maybe go ahead with something right now, they haven't found the property, or maybe they're 12, 18 months away. I understand that you do a lot of stuff on social media, and you do little educational pieces from time to time and things like that. So I'll share some links as well in those, so that way people can at least follow you and get to virtually connect on some level.
Well, you can never be too ready. So even if you're not ready now and it's 6 months or 6 years, knowing what you need to know doesn't really change. So you should always be informed, always be educated, always do your homework, like we said earlier on. So speaking to there's no such thing. Our clients will say, I think I'm doing this too early. There's no such thing. As long as, if you leave this meeting and you're not quite ready, but you're as informed as I am, and 100 times more than you did before you walked in, that's a successful meeting.
Of course, information's power.
Absolutely. So you can never be too ready.
Absolutely. And look, information is power, but then action is even better. So what advice would you give to someone as a result of watching this video? Because people might look at this and go, okay, wow, there's some really good, golden nuggets here. There's some good content. That's a really good idea. But then what? What steps or action would you encourage people to take from here on in?
It's good to want to invest. It's good to want to acquire property. And unless you've got the money in the back of the car, you generally have to borrow it from a bank. So one of the first steps and the first point of call that I'd probably look at is, yes, it's important to understand why you're investing, who you're investing with, and what areas to look at. But the money is the most generally the first step. Can I get the money? So the first step would be to call, reach out to somebody and make a time to sit down, discuss what's going to be a confidential conversation about what can I actually achieve. Is it worth me looking around? Do I have the capacity to borrow money? If the answer is yes, then you can take the next steps. And a good broker, which we spoke about before, will communicate that with you and say, look, Nidal, I think you can borrow roughly this much money. Here's some options moving forward, and they'll help facilitate that to a degree for you as well. So once you make that call and you reach out to somebody, I'd really like, if my clients rang me, I want to learn what they're doing, but then I want to sit in front of them. I want to get involved with them, learn what they're looking to do, and then help them start to put, steps and pavers all the way towards that property. And if it's not going to work, why? And how do I help them overcome that if we can?
Absolutely. And, we naturally become part of that journey anyway. So I guess one of the best things about what you and I do is that we're there along for the ride with that person who's going on that journey, of growing and, going through the motions and all that kind of stuff. So, look,
especially if someone's been told they can't do it. Like after we finish this interview, I'm going to make a phone call to someone who got told by 2 institutions that they couldn't borrow any money, but they just were unable to understand that person's pay slips and the level of income and how it was actually earned and the style of income without going into too much detail. So when we get off this phone call, I'm going to ring them and tell them they bought their first home. And I'm very much looking forward to making that phone call and just hearing on the other end of the phone how they're going to react, because when I first met them, all hope was lost. And I said, look, I'm pretty confident I can get this done, because I just don't feel you've gone to the right person with the right policy to understand your income. So yeah, and I agree with you. It's very exciting getting off, because I've actually, and this is something personal, but I'm happy to share it. I've been in a position where I've had my own loan declined. So when I went to buy my very first home, my finance was declined. So I know what it's like. And I remember feeling that I'd never buy a house again. So I've been down that journey. I've bought property. I've been refused. I've been approved. So not only do I do it every day, and I have done for many, many years, 10 years, but I've personally experienced it. So I know how gut-wrenching it is when you're told no. So I want to do my best to not deliver that to my clients.
Absolutely. Now, look, and it's, and again, you know, speaking from experience and how you guys operate, because I know you and Sam and the guys at your branch are, I can't fault you guys in any way, shape or form. So highly recommend Aussie Prospect. So look, in wrapping up, I want to thank you again for the time and for the golden nuggets that you've shared with us today. Is there any closing comments or anything in closing that you'd like to share?
Look, not really. You know, borrowing money is on one hand simple: a few pay slips, a few documents, ID, and then off you go. But on the other hand, it can be complicated and sometimes over involved in banks and policies. So it requires a degree of patience. Communication is key. A good broker will work with you, and you meet brokers that go, all my transactions are perfect. That's not reality. You're always going to experience a few bumps and hurdles along the way. But at the end of the day, you're borrowing quite a lot of money. So you're expected to kind of go through a few questions along the way. So be patient, do your homework, speak to the right people. And if you meet with someone to help you with this particular transaction and you don't have a good feeling about it, then maybe get a second opinion.
Absolutely. Great advice. And highly agree with you there. So again, thank you very, very much, Bechara. I really appreciate you jumping on board and doing the video with us. For all of our viewers, if you found some value in this video, make sure that you hit the like button, subscribe, share this around or with anyone that you think can get value out of this. And until the next time, hope you have a great day and we'll see you on the next video. Thanks and all the best.